The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
My pleasure to be here, and this is Monday, the 19th of May, and fascinating session. This started off down, started off much lower in the futures, had a rally. Dow's lagging, S&P's up 0.20, Dow's only up 0.02, so the Dow's up 3.41 at 16,494. S&P is up, it's up 3.82 at 1881. 1881, good year, that very good year, 1881. Picasso and Stravinsky were born. I think Bela Bartok, no, he was already, yeah, maybe so. Anyway, so good year, 1881, and it is one of those years that you can turn around, sideways, upside down, still 1881. And this is going to be very interesting because you got the comp up 27. All of a sudden, you see, what I was speaking about last week, and one of the reasons why I made a big deal about the fact that a rotational correction could actually see a rally this week going into leg D in the weekly charts that's missing. I did so much work on the weekend just to see, are there alternate counts? Is there another way to look at it? It seems to me that there is a chance that the rotation, nothing great, this is just selective stocks moving selectively higher, and the ones that got beaten down, like the NASDAQ, you remember, the IBB, just a major sell-off, 22%, a rebound, and that rebound can give you the rotation that allows for a rally that is a surprise to the ultra bearish outlook, but at the same time, it's confusing to the bullish outlook because it's so selective, and that's really what I'm looking at here. So for my subscribers, we actually now in a mostly cash position. We do have shorts. We have a short. I don't know if the two will negate one another, but that's just the way it is. And I was prepared to make the stops really tight because I don't want, on the short side, I'm upset now that some of the long positions were taken out, although they're actually not performing all that well today. They are up, stocks that we had, but it was the viewpoint that there could be slightly higher highs to come over the period of this week. So let's just continue. We've got gold up 5 at 12.98. Silver's up 10 cents at 19.43. Platinum's up nicely, up 9 at 14.75. High-grade copper's back in the 3.18 area, up 2.3. And you've got crude oil back in the 102.60s. The 102 to 103 area is going to be something to watch. Bonds are only up 4/30 seconds at 137.18. I say only because they were up a little, they were down a little bit, then they were up. And this is going to be very interesting. Let me just show you the TLT. Whoops. Well, before I do that, let me just show you. This is the E-mini before I take that chart, because this one's going to change its pattern in a moment. This is the E-mini, and it's broken the resistance in the 120-minute chart right there, the little up channel. So this is now very important. Why? Because it's tackling those two very ugly candles that started off on the 15th at 10 o'clock, 15th of May, and that was with a high of 1884.75. That's going to really be the test. If the S&P E-minis are able, by the end of the day, to have a much bigger rally and to go into the 1883, 1885 area, you have to consider that there now is really a good chance that we will go back and retest the previous highs. The dollar is down 10 cents at 80. Yep, the euro is just up a fraction, and the Great British Pound is up a fraction. I think that's all I need to do right there. Why? Because I want to look at the VIX. made a big deal about this VIX index. Started to act as if it was going to be early on Friday, as if it was going to be a really a good chance that the VIX closes towards the highs. And then all of a sudden there was that reversal intraday in the 120-minute chart. Look at this. The 120-minute chart went to a peak B at 1377. Now it's trading down at 1243. Yes, I had a couple of emails about the VIX index. Why am I trading? Why do I even want to think about trading the VIX index? Because we've had some really good success with that VIX index. I'm prepared to have some insurance. We're out of it right now, but I will do that when I think that the chances are increasing that the VIX has sustainability. To have a one-day pop is useless. You really have to have sustainability. And the VIX is the volatility index. And look at this. In the 120-minute chart, had this peak B, pulls back, coming back down. If the volatility index, which is trading at 12.39, goes to the 12.20s, that's going to sustain a rally. If it suddenly pops back up to about the 12.50s, that'll curtail the rally. Just make it as simple as you can. Now, if I'm looking at the different indexes, look at this. This is the Qs. What I'd said this morning is that there's a chance that the Qs could try for 88.62 to go to leg D in the daily chart, but that's not anywhere close to the recovery highs of 91.36. But it does say that the trend line resistance of 88.92, that area, could be touched. So I'm looking at this and I'm saying, let this play out. You don't have to stand in the way. If you have any long positions and they're acting well, that's great. Just raise your stops. If you have short positions and they're still working, in fact, I'm looking at certain stocks that have been leaders up that are now taking a bit of a breather. And that's part of that rotational aspect. I'm also looking at stocks like Google, not G-O-O-G, which is having a nice day up 1.20. It's up 6.26, 526.89 right now. Great bounce. The last bounce in the 120-minute chart failed at a peak C, and now we're going quite nicely with the technical starting to improve. If you're looking at Amazon, you see Amazon's not participating today. It's actually come back off the lows, but it needs, Amazon at 297 needs to get to the 232, 233 area to say, hey, I'm also participating. Don't forget about me. If you're looking at a stock like Zillow, acting really well, up 4.16 at 111.26. And now we finally got that leg D. Today made that leg D in the weekly. Oh, I was waiting for that. It would have been a nice trade. Just kept seeing it too late. I didn't want to buy it as it was rallying. And let me get the monthly chart there. Yep, monthly chart. I got it as a leg F, but I'm not sure if that's not recycled. But in the meantime, it's acting pretty darn nicely. So let's see. IYT. Well, first of all, IWM. Here goes the IWM. Whoops, IWM over here. Not over there. IWM. So IWM is bouncing up 1.31%. It's at 111.01. This $1.44 gain is very nice because it snapped through the 110.43 9-period exponential moving average resistance. That double bottom in the weekly chart is going to be so important because that monthly is saying, hey, there could be a little bit of a bounce, but I'm anticipating a right shoulder failure in the Chapman wave. So, and if we're looking at some of the stocks that we featured in IBD, Investors Business Daily, FLT, Question Zero, Fleet Core Technologies, acting nicely here. Had a pretty big pullback from the peak B, top that it made at 125. What was that, 126? 126.48. At 126.48, let me see, right there. Oh, I typed this in. Supported 121.90s, and it went and broke, and it went down to 118.22. I typed that in last week. So this is going to be very interesting. Why? Because Fleet Core Technologies is making this big cup formation. And if it continues rallying like this, and it breaks above that 126.48 area of the 15th of May, then there's a real good chance it's going to fill the gap, and the gap has a low of 128.96 from the 4th of March, and the all-time high was 4 days before at 132.22. This is one of those stocks, I was looking at it in the Investors Business Daily, that a lot depends. I typed in a circle over there to say that there's a chance that it could hit that by June, somewhere in the 135 area. I don't know. That's another, wow, that's 13 points to go. We'll see. So in Investors Business Daily, THRN, which is, I think, the number one, the list of 50, THRN. I keep typing that in, and it doesn't come up correctly. THRN. Where's my new I've got the paper as well, let alone the electronics. This is THRM. THRM. There you go. Leg D in the monthly. Gentherm Inc., climate controls, autos and trucks. Yeah, you know, this is a great area that they're in. Leg E in the weekly. I'm not sure exactly what the daily is. It's E/B at this particular point, but acting very nicely. Good move. Oh, you could actually have bought it at the open. Whoa, isn't that interesting? At 38, at 38.50, trading right now at 40.93. Big moves in some of these stocks. So that's what I'm looking at right now. Yeah, there's a question I had. Am I looking at June as a potential top for some of these, for some of the areas? And I'm thinking that it could occur in May, but let me just look at the calendar because, you know, we've got the long weekend. Long weekend comes up this weekend. So that's 24, 25, 26. We get back on the 27th and have a full week. Yeah. I'm thinking that that week, the last week of May, just after the holidays, is... Now, okay, let me just define it real quickly. I don't want to make statements without qualifying it with exactly what I'm looking at. You see the Dow right now? In a sense, it just might... Oh, I better put a down arrow there. In one way, it might just have completed that stalk leg formation in the daily, having gone from the leg to the body to the neck, to the head, to the beak, back into the body. And once that's done, a counter-trend rally, if it doesn't fail within 2 to 3 bars, a counter-trend rally, excuse me, could in fact become a new buy signal. No, I shouldn't say buy signal. The rule is that after the beak is formed, there's a very strong rally. How long it lasts is dependent on the chart formation. All that the technique says is that there's a very strong bounce. I'll be right back after this break. 877-927-6648. Dow's up 29, S&P's up 6.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman. I'll just ask quickly about the EM, which is the emerging market iShares. Yes, it's been a spectacular move for them, getting up to resistance now, and the monthly chart shows it all, because the weekly chart has made the H pattern that goes to an M pattern. And the monthly chart has got that very strong resistance zone that's been the repellent. So the repellent line to take out in May would be at 44.05, just $1.25 higher, and then the breakout area would be up in the 45.50s. So let's go to our first caller. We've got John in Philly. John, how are you?
Basil, good to speak to you, sir. I wanted to bring up the conversation of stock indices. As you've so eloquently pointed out, we've been involved with rotational markets for a number of months now, making it of the utmost importance to pick your spots and your instruments very well, otherwise getting chopped up.
Correct.
So with that context, I wanted to make an observation about last week. Of course, on Tuesday the 13th, the S&P, the Dow, and the NYSE Composite all made record highs. Very interestingly, on Thursday, 2 days later, May 15th, the IWM and the Russell 2000 made new lows for their moves off the highs back in March. And
correct.
I'm sorry to say, for myself, I failed to do the complete analysis last week, where I looked at the IWM and saw that the May 15th low at 107.44, at least according to my data source, and my data source could be wrong, was not below the February low, but I looked at the Russell 2000 cash index, and there I know my data is accurate. And on the Russell 2000 index, Thursday the 15th of May, the price went under February 15th low, which was right down into the area of the November 2013 lows, and reversed higher. And, of course, we're now strongly higher, at least on the very, very short term. So
okay, give me 1 second. I had this all notated. I seem to 1082.72, 1082, 1082. It's a pity I haven't got all the data that I had notated before, because I had something quite interesting on the Russell 2000, which was a little bit different, as you noted. So 1082.53. Yes,
yeah, exactly.
It went down less than 20 cents lower.
Now, one thing I will tell you, Basil, that I learned very, very long ago by a number of analysts, actually, none of them are still with us, God rest their souls, but the idea was this, and I think it was a GAN observation that was put into practice and taught going back into the 30s and 40s, namely with a decline, and let's take the Russell 2000 cash, a decline that approaches a prior low would be expected to have sell stops just under, as long as who are still hanging on have placed their stops under prior lows. And in the case of the Russell 2000 cash, that significant low, February 5th, 108.72, one could have figured or speculated, we won't know this for sure, but speculated sell stops would have been resting just underneath that.
Right.
The son of a gun, Basil, last Thursday, if in fact that low of 82.72 wasn't penetrated and immediately reversed, demonstrating some group of buyers are sitting there waiting and acted decisively. So that's just an observation of what has happened. My question to you is there a chance that an intermediate term bottom is in the Russell 2000 with a decent advance to come?
That's a very good question. One of the reasons why I wanted to make stops on short positions just as tight as I could with just a reasonable leeway, is because my assessment for a little while now, as you know, has been that if there is a rotational correction, yet again, and remember, it was back in the summer of 2010 that I started the concept in my own thinking. I initiated that concept as a way of organizing a sell-off in such a way that fear isn't reignited, but instead you get sectors that hold up and sectors that come down. And that's that part of the rotational correction. I'll talk about this because it's a really important point. Right now, you brought it up exactly right. I'll be right back with John and Philly.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman. We are back, and we're on with John and Philly. Had a great question about the IWM, which is the Russell 2000. That's the smaller cap stocks. They've taken they were the leaders at a certain point, and they've taken quite a hit to the downside. If you're looking at the composite, the weekly chart, that's the broader NASDAQ Composite Index, slightly different chart pattern. Now, let me just do this. I'll do this quickly there. Just slightly different, but not as much as one would think, considering that you're talking about 2,000 stocks in one, and I think quite a bit larger in the other. Most importantly, though, the concept that during a rotational correction, you might see former winners pull back, and you might see the most current losers start to rally. That is a concept that is really important right at the specific point. Why? Because if you start to get a Baidu, which is running okay on the day, a Google, which is running a little bit better on the day, is up now 6.82, an Amazon, which was doing okay, but really is not showing tremendous strength. But if you start to get the leaders, and if I go to the NASDAQ 100, you've got those stocks like THRM, which is doing very nicely. You've got Avis. Oh, well, that wouldn't be in the NASDAQ. Let's talk about another one with 4 letters. I saw it just now. Yes, you've got a couple of the, just a few of the of the biotech stocks, if they start to participate, there is enough energy there to say that you could have, and I'll show you the chart pattern I've got here, and then I'm going to go back to your question and ask you something specific. In the RUT index, you could see a bounce from 1114, where we are, about 15 to 20 points if it's going to take most of this week to do, and it's going to be very important. Why? Because if the Russell, which is above the 2,000 right now, the daily chart of 1106, if it starts to break down and close today or tomorrow, I'd say it's at 111.14. If it closes under 108 by tomorrow afternoon or maybe Wednesday morning, that's going to be like one of those failure patterns that you've seen, leg A, and then it goes to an A minus very quickly within days. Then obviously that's the pattern du jour, lower highs, lower lows. But if at any point this week, and I'll give you the whole week, the Russell 2000 go above 1136.95, let me just put it together for the moment, if you don't mind. I'm just going to put it together with the Qs, which are the NDX 100. See, the way I have it right now, the NDX 100 weekly looks like it wants to go to a leg B. The monthly is an E with a high-level consolidation, and the daily chart has every sign that it wants to try to test above 88.61, which would be leg D. And that says that the Qs would stop, or at least would be challenged with resistance either today or tomorrow between 88.90 and tomorrow would be 88.95. So
tell me something. As you look at that Russell 2000 pattern with that 1082.52 low last Thursday, May 15th, can you envision a scenario, and might you even be thinking that that's a intermediate term bottom with a rally ahead to go retest the highs of March?
Yeah, well, that's what I was trying. I guess I didn't articulate that answer very well. Let me try it again. To get a move that strong, you can't have a mixed. You can't have the rotation within the rotation. You know how I like to say, everybody says that markets hate indecision, and I say, no. There's indecision every single day. Markets hate indecision about indecision. Well, this is the rotation of the rotation. In other words, you can't, unless Amazon really participates and you don't get just a few of the NASDAQ stocks rallying, they themselves, I don't think, when you know what went on in February, from the February low of 1082.72 to the March 3rd, was it? Yeah, the March 4th high of 1282. Let me just type that in. 12.82. You had a lot of participation because some of those stocks were doing fabulously. The Googles, etc., were all screaming. So if they aren't able to participate in unison in this move, and I don't think they can, the answer, actually, John, let me make it as clear as I can. I think that the Dow and the New York Stock Exchange and the S&P following are going to be the ones that go to close to, in some cases, or as in the Dow's case, I think there's a chance that it tests and slightly breaks its all-time high next week on one condition. That is if the Dow does not close under, at this point I'd say, under about 16,280 in the next 2-3 days. A close below that says, forget it. But if it's able to sustain this kind of I wouldn't say weak, and I wouldn't say strong. It's just a counter-trend rally. I think it's a counter-trend rally which has the chance of actually making a nominal new high to get that leg D in the weekly chart. Yes. Then what I'm thinking is that the NASDAQ and the IBB, that's the NASDAQ biotech sector, will continue to lag, and they don't, and IWM is included, and they don't have a chance of getting to that high, to the recent highs.
Yes,
that's kind of the way I've got it right now. So, to answer your question, your question specifically asked, is there a chance that the recent low that we just saw, the little double bottom low, regardless of whether it was tested or successfully or not, is there a chance that that low is going to be enough of a significant rocket trigger point to have a rocket ship move to the upside, thereby allowing the laggards now to go back to the all-time high? My answer is, in this particular rotational high-level correction, I suspect no, and I also suspect that we will start to make lower lows and lower highs maybe in June, if it doesn't start the last week of February.
Very good. Thanks
I don't mean February, I mean the last week of May. I don't know how I got to February, I mean May.
Very good. I do indeed thank you for sharing that overview and answering that question. I wanted to share just a detail, a fundamental fact about that universe of stocks, the Russell 2000. I had done this time ago and observed the following, that the total market capitalization of all those 2,000 names, Basil, is less, and I repeat less, than the sum total of the four biggest names in the United States. And the four biggest market cap names, U.S.-based companies, are Apple, Google, Exxon, and Berkshire Hathaway. If you take the total market cap of those four names alone, they exceed the sum total market cap of the Russell 2000 package. And I share that, and I just think out loud that the Russell 2000, the IWM, tends to run when institutions go to the buy side and to the sell side.
Yes.
And most of those institutions will be making a sector bet, if you will, on that 2000 group using an IWM ETF or one of the many derivatives that represent that that's also available to the big boys. And if they decide to go after a small group or on the margin, if big players go for that group, you think about it, they're going after 2,000 names, but it's really smaller than the four biggest. And we see how those four big names...
They're only going for a handful of the 2,000 names. That's really the issue. Not a handful, two handfuls, let's just say. You're absolutely correct. But I also wanted to add something else, that this mega deal with Pfizer right now, the amount of money there is probably it probably is 2/3 of the total number of the as well. Just that one deal, 80 something, whatever it is, billion. It's some phenomenal number. So hey, thank you for calling. Got to go to my callers. Thank you so much, John. I appreciate it. Let's go to Scott in Sarasota. Scott, how are you?
Very good, Basil. When I hear calls like the last caller, I just get completely confused. And I know it makes sense to a lot of people, but I got to tell you something. I've been doing this for 5 years. Anytime I got into a lot of the things that you're talking about there, lost my rear end, because it all boils down to the horse that you pick on any given.
You're absolutely right. That's what I always say. It's enough with the words. When we get down to it, are you buying or are you selling? In fact, it reminds me of, do I have time? Years and years ago, I was conducting. I used to be a conductor and a performer, a professional musician. And I was conducting, I think it was a Beethoven symphony. And I stopped and I said, oh, no, this is where Beethoven's walking in the forest and the sun is filtering through the trees. It was a time of the day that he always went for his walk. And as I'm talking, I hear from the back, and it was probably a trumpet player, and he said, do we play louder or softer?
Exactly.
And that's exactly what it boils down to. Scott, you'd like to look at?
I'd like to look at HOV. I called you last week. It's in that trading range again. I scooped up some money on the 5 cent thing. It keeps coming down to that 4.44 and then going back up. And I grab 5 cents every time. I'm doing like 10,000 shares. And
if you are doing that now. Right where Hovnanian is, Hovnanian Enterprises, A shares, trading HOV, trading at 4.47.07. you could try that again, but it's starting to get a little shaky. Remember what I said to you?
That's why I'm scared.
Right. So
how many times you're going to go to the well without someone taking a behind and pushing you in?
The H pattern goes eventually to an M pattern. In fact, it's right here in my, this is chapter 17 of my CD book. I just want to show the pattern for those of you who are listening and looking at Tiger TV. This is the pattern that we're looking at right there. That this is on slide, let me just move it up one. Slide 334 shows you the arch formations or the scallops to the downside. Eventually what happens, it finds some kind of a base and it turns into an H pattern, but still with not enough strength to break out to a brand new move, and the H turns to a lowercase m, and that M invariably breaks one more time underneath the left side low bar, and that's sometimes the move that is going to give the move all the way back to the top. Now what we've got is Hovnanian is not. It's just an amazing thing. You always wonder, how does the stock know that at 4.36, the low of the 15th of April, it could have all these little trading range bounces that make the H pattern come back and not break 4.36? I suspect that there's a chance that it might break now. So the next time you go in, this is the one that you got to be most careful if you're going on the long side. And I would actually say to you, why don't you wait for a test of today's low of 444 before you consider it? And I'd probably say wait for a turn that you can actually see. Don't try to pick the down move as the low. Wait for the low to occur and then move to the upside. And I know you're skimming off and it's working great for you. This is the one that you have to be a little bit careful of, because if Hovnanian takes out 440, the low of the 15th that occurred at 4 o'clock, if it takes that one out, then it should go lower, and then it might test 4, not 36, but 432. That could be the move that either breaks down or it gives you a really strong spring to the upside. That's the one that's going to have the most volatility.
I agree. I'm thinking after it hits the 430s, then we're going to go back, if you look at the 3-month chart, back to like March 3rd, where we had the peak, and then it'll repeat the whole thing again after that. So
my only recommendation to you, because you're the one that actually pulls the trigger and does the trade, so you know exactly your timing, I would make the stop on thirds. Every third of your position, I'd raise the stop a little bit. And then when I get out, I'll make the decision like you've done before, just to get out of the whole thing. Or if it's actually starting to climb quite nicely, then you can scale out in thirds. But this is the one that you've got to have a little bit more patience, because my eye says, and the 120-minute chart says, wait for a test of today's low. If it takes that out, then you're going to have to wait for that the 440 level to be tested. And if it takes it out, then this is the time that it does go under.
It is amazing, Basil. You would swear these are little faces on these things, or monster faces, or baby faces, or something. That there's some sort of personality involved with all these stocks. It's just.
Yeah, they have. You see, that's a great observation. I hope people can really get it. Know your stocks. Like we try in my opening call, we try to know our stocks, so we go in and we go out. Get the character, which is exactly what Scott's doing. So, hey, good luck with the next one, Scott.
I call it holding the pulse. Hold that pulse 24 hours a day if you're serious.
The pulse is what you want. Great observation. Thanks for calling, Scott. Good luck. We'll be back with Rich in Orlando straight after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Well, folks, we're back. We're back with Richard Orlando, and we're going to look at... Hi, Rich. How are you? Oops, Richard.
How are you doing?
Hi, yeah, I'm doing well. How are you doing?
Wonderful, wonderful. It's beautiful down here in actually down in Point Siena, Florida. It's a beautiful day.
Well, we also had a beautiful weekend and a beautiful day. It's about darn time. You wanted to look at?
Vail is the Companhia Val de Rio. I think it's either Brazilian or Venezuelan company.
Okay. And do you have a position at all?
No, I do not. But I've been watching it for a while, and I guess it just looks as though it had kind of bottomed out, and then it seemed like you had a high-volume top there at 1424, and it's been coming down with lighter volume. The fundamentals, it looks like it's making money. It seems to be some merit in it.
Folks, we're looking at Valet. I can't remember now which one we pronounce it at, SA, and it's VALE is the symbol, trading at 13.43, down 30 cents. I've had a terrible time with this. I know a couple of years ago it was the stock de rigueur. Everybody who had it just made a lot of money, and then it just collapsed. And lately what it's done is a perfect, in the Chapman Wave methodology, perfect cup and perfect arch formations, left side, right side, price time edge, going to the peak D, pulling back. But now today's action is very disappointing. If today, instead of trading at 1343, it was trading anywhere in the 1390s to 1405 area, I would have said to you, hey, I love the action. I don't like the fact that it's taken quite so long to get to B, because every other time it's not a straight line move, but it's been a pretty good move, and it never broke the 9-period moving average until it made peak D. This time it's saying, there's another pattern. It's the pattern I talk about in my CD introducing the Chapman methodology. It's the right arm, the right shoulder failure pattern. I'll just show, if you want to look later on, you'll see this particular pattern right here. That's where the failure occurs.
I'm on I can see you on the Tiger TV. I'm on the computer.
Right. So what happens is that it's almost like the H pattern, but up at the top. It's a right shoulder failure. And in the daily chart, it's actually occurring in this formation, but it's not nearly at the top. In fact, the monthly chart has the H pattern. And every other time anyone's called about this, I said, I'm a little concerned that it's going to retest the low of 1239. Here's my recommendation. Because the market is at least trying to move higher today, most of the indexes are, and this one's failing. It's down 2.18%. I'm going to say hold off looking at this just at least today and tomorrow maybe. But if tomorrow it takes, or the next day it takes out 1321, I really don't want to touch this. But if by this afternoon it repairs this damage right now, and it gets to, instead of 1343, it just moves up another 17 cents or so to 1360, and then tomorrow has a nice day, I say, hey, with a tight stop, small position, I treat it as a trade, expecting that there's a chance it could go to leg C about 1424. And that's the only way I would deal with this. So I'm going to suggest hold tight. I wouldn't actually get into it. Portuguese, what was it? Valet, not Brazil.
Yeah, it's Campani. I'm sorry,
Venezuela. Yeah. Okay. So I'm going to just say hold off for now. The weekly chart is not that good. The daily chart would have been okay, but it's not the way it should go. And the monthly chart has me really nervous. Something's going to happen with this stock if it doesn't rally very sharply quickly. So a commodity conglomerate, yes. So hold tight. We'll be back with this, but hold off for now. Okay, Rich?
We'll do that. Thanks, man.
Thanks, folks. Hey, great news, everyone. Larry Pesavento is back. He'll be here right after me in another 12 minutes or so, 8 minutes or so. Stay tuned for Larry Pesavento and all the shows on TFNN. Welcome back, Larry. We missed you a lot, and I'll be back tomorrow at the same time.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.